With Bitcoin's downtrend continuing, the question on everyone's mind is, when will this carnage end? In today's video, we're going to be taking a look at likely bounce points on the macro chart for Bitcoin, how low Bitcoin could theoretically go, and what impact, if any, has this correction had on the macro charts. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we're going to be going over the macro and the short-term charts, discussing whether or not this correction is over, potential bounce points for Bitcoin, and what impact, if any, this correction has had on the macro trend and next bull run. We'll also go over the short-term charts, discussing the likely next move for Bitcoin, whether or not the trend is likely to continue down in the short term, and how to plan and prepare for the next likely moves. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in our VIP, you can find more information in the pinned comment of the free channel. You can find our entire trading track record as well as descriptions on what you'll get access to. You'll get access to our main VIP group chat, where we post trading setups, exact entries, exact targets, and trade justification, as well as our group chat with all of our members. You'll get access to our general chat, our trading chart and education chat, our daily video chat, our help chat, our news chat, and our trade setup chat. If you're interested in getting access to all of that, you can go ahead and contact me in that pinned comment. Without further ado, guys, let's go ahead and get stuck in. A lot has happened on Bitcoin. Bitcoin has seen the daily candle close under 40,000. This is the lowest daily candle close we have seen for just over nearly 2 months, about 5, 6, 7 weeks. We saw a daily candle close above 40,000 all the way back over here at the start of December, on the 4th of December. So this is the lowest daily candle close we've had now for about 6 or 7 weeks. So we are definitely seeing that downward move play out. The big question is, how much lower are we able to go? And, has this correction delayed the bull run? Has it impacted the macro trend? Those are the real big questions we're answering today. So starting on that market data, guys, how are we currently looking? 24-hour volume is up 174%, sitting at a total of 136 billion. 24-hour liquidations are up a whopping 531%, sitting at 254 million, with 218 million coming from longs and 35 million coming from shorts, as Bitcoin tumbles underneath the major short-term support that we held for over 7 weeks. Again, we entered this range on that breakout of 40k. This was the start of December. We retested it numerous times, and we have finally actually broken below that level. So we're discussing in today's video what this means for the price action. Is it deviation? Is it a confirmed breakdown? Are we going lower? Are we going to bounce? Etc, etc. So going over to that market data again, guys, we can see on the DXY, the DXY is still looking relatively bullish over here, as we are sitting above that major uptrending trend line, the 50 EMA and the horizontal support. We would like to see a breakdown of this level for the DXY to correct back downwards to 101. Until then, the target we are still expecting, as we've been expecting since the breakout, is going to be 105 to 105.5. Looking at the broader markets, S&P 500 and Dow Jones have opened up their week green, of course, and we do have about 3 days and 22 hours remaining on those weekly candle closes. Currently still green, which of course is nice. We did see the S&P 500 hit our first target of 4,900, since then having rejected a small amount to $4,882. Again, this level is now going to be acting as an area of support, so provided we hold this support, the directional move should continue upwards. If we do drop below the support level, we could then expect a correction back down to 4,600 on the high time frame, but until then, support is support until it is not. Moving over to the Dow Jones, a very similar scenario occurring here. We have broken above that local high that we printed all the way back on the 26th of December. We have pushed up to 38,400 on the weekly chart, and of course, we are seeing a little bit of a short-term pullback. Provided this area of support does hold, we do still expect a continuation upwards to around 39k. If we do break this local low range, we'd expect a short-term correction to our next area of support. That's enough about that, guys. Let's go ahead and jump over to Bitcoin as we have so much to talk about. But before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump over to Bitcoin. So starting on the short-term charts, a lot has happened and a pretty significant move has occurred. Bitcoin has broken down from its major 7-week-long support and bearish trigger. If you recall back to our videos, and we talked about this basically every single day for the last X amount of weeks, a breakdown of the support level will send Bitcoin into the range between 40,000 to 38,000. This area is a major high time frame support, and it is a gap on the VIPV, which will likely fill. Meaning, if we are going to see any sort of consolidation, any sort of reduction in volatility, it is likely going to occur within this 38 to 40k range. It is the most likely high time frame bouncing point for Bitcoin moving forward as of right now. So going over to those high time frame charts, we can see that 38 to $40,000 range marked out as this red box. This is our point number 1, this is our point number 2, and this is our point number 3. Each of these red boxes reflect a major high time frame support zone for Bitcoin, with the two major levels being point 1 and point 3. Point 2 is not as significant as support as point 1 and 3, as point 1 and 3 represent not only a major high time frame horizontal support, but they represent a flipping point of the overall trend, meaning a breakdown of 38,000 puts Bitcoin into a weekly downtrend. A breakdown of 30,000 puts Bitcoin into a monthly downtrend. So these levels actually directly impact the overall trajectory of the trend on the macro chart if lost. So we're looking at the price section over here. We have seen a bearish divergence. The bearish divergence put us up into that 48k range. And we talked for a very, very long time about the significance of 48k, and now 48k was very likely to be a rejection zone, and we were very unlikely to break a monthly candle above 48k until at least after April 2024. So that played out perfectly. We saw a rejection, and Bitcoin has since corrected a pretty considerable amount since there. We saw about, let's take a look, about an 18 to 20% correction from 48k, and from that absolute high, we've seen about a 20% correction into our next level of support. Remember, price bounces from resistance, okay, this is resistance, sorry, into support, and we have the price bouncing between these levels. So the big question is, will Bitcoin drop below 38k? If so, what impact could that have? And has this current correction negatively impacted the macro chart? So let's go ahead and answer that. To do that, we need to jump over to our monthly chart. If we take a look at our monthly chart, we have got our 4-year cycle printed over here. The 4-year cycle is simply a data range trend of different phases in the cycle. We have our bear market phase, the red phase, the accumulation, the gray phase, and the bull run phase, the green phase. if we are taking a look at the bull run specifically, we have seen in the past a specific structural pattern play out that not only determines when the bull run will start, but also major points of macro resistance. And in this instance, the 48k level is a major point of macro resistance. So let's go ahead and take a look. We have seen the bear market print a all-time high. Okay, that was our bull market all-time high. We saw the bear market print a all-time low. After the all-time low, okay, or should I say the bear market low, we consolidate upwards until we reach the dead cap bounce high of the prior bear market. This is reflected as that dotted trend line. So the dotted trend line runs across, and in both instances, okay, of the prior two cycles, we've only ever seen a break on the dotted trend line on the monthly chart after the halving event. The halving event in this instance was reflected by this vertical green line and this vertical green line over here and this vertical green line over here. Okay, the halving event is about 90 days from now. So according to prior data, we have only ever seen a break of the monthly candle above that dotted trend line after the halving event. So that led us to believe that we would not break above 48,000 until at least after April 2024. If we take another step further and say, well, what is the significance of 48,000? We have seen every time we break above 48,000, the trend angle significantly increases from the point of which the price action broke above on the monthly chart to the all-time high in comparison to the all-time low or the low of the bear market to the point of which the price action broke above the dollar trend line. If we compare the trend angle, we can see a 35-degree to a 65-degree angle, then we saw a 34-degree to a 50-degree angle. In this instance, the trend angle from the low to the current break is 37, which matches that 35, 34, 37. We'd expect between a 50 and a 65 angle increase after we break over 48k. So what does that tell us? It tells us the bull market is still expected. This breakdown has not been unexpected. We have seen it in the past. We saw a rejection from the dotted trend line here for 2 months before we then broke it back above it. We saw a rejection over here of the dotted trend line before eventually breaking back above it, and we are seeing that same pattern play out again. If we move over to the monthly chart, or shall I say the weekly chart, we can see the 3 or 4 4-year cycle again played out in the 3 different phases. We've had phase 1, so cycle 1, phase 2, cycle 2, phase 3, cycle 3. That is the cycle we are currently in, the 3rd 4-year cycle phase. If we take a look at the 3rd year specifically within the 4-year cycle, we can notice that every single 3rd year, year 3, year 3, year 3 is the year that we break over that dotted trend line. We break over the dotted trend line, we break over that dotted trend line, but it is also the year that we continue to retest the all-time high of the prior cycle. So according to our macro data, we are still expecting the bull run to start this year. We are still expecting the price action to reach the all-time high of the prior cycle. These points remain valid. When are these points at risk of breaking? Okay, that is when we break below 32,000. If we come below and break below this level, this $32,000 level, this yearly long diagonal uptrend, this major monthly resistance, if we break below this level, then we are at risk of invalidating the pattern we have seen play out in the past, which is currently playing out now. We will invalidate or likely invalidate the 4-year cycle. This could have massive consequences on the time the bull run starts or even the length of the next bull run. Okay, so now that we've got that out of the way, we know that every correction at the moment for Bitcoin up until 32,000 will keep the macro charts healthy in regards to the 4-year cycle. Obviously, the lower we go is not ideal. We would like to find support and bounce from these higher ranges. However, just to go ahead and say one more time, unless we break below this level, you should still have the directional bias on the macro chart that the 4-year cycle is going to hold and we are going to see the next bull run. And thus, these levels should be acting as accumulation phases on the correction. We've seen a 20% correction for Bitcoin into our first major area of support. This should be acting as a potential bouncing point. If we break down again, this is going to be the next level of support, and we break down again, this is going to be the next level of support. If Bitcoin comes all the way down over here, it doesn't matter, provided we hold this yearly uptrend, the health on the macro charts will currently remain. If we do break above 48,000 at some point, which is currently likely to still occur, we are going to see a continued move to 52,000 and to reach that all-time high according to our macro monthly data. But let's go ahead, guys, and jump into short term. So like we said, Bitcoin has now broken down from its major level of structural support, and we have entered that $38,000 to $40,000 range. Let's talk about the $38,000 to $40,000 range in a little bit more detail. So let's go ahead and zoom out. If we take a look here on let's go to the 6-hour chart, just to zoom out a little bit, we can see on the right-hand side, we'll have our VRPV pop up in just a moment. We can see a massive gap. Okay, and actually, let me change the color of this to black, just so it's easier to see. We have a massive gap, guys, between, as you can see, the $40,000 level, okay, and the 38K level. This is going to be a major area of support for Bitcoin, and we do have a cluster of volume sitting just under 38K, again, solidifying that 38K base as a strong base of support. This is going to be our ideal bounce point for Bitcoin on the macro chart and should act as your reaccumulation phase for Bitcoin if you sold at 48,000, or potentially a nice area to DCA in altcoins on your current spot positions, like I am personally going to be doing. If we do lose 38,000, guys, this is when it becomes quite scary. If we lose 38,000, we are very likely to retest our major support down around 35K. If we do lose 35K, we are heading down to fill the gap between 33 and 36, which is going to be a full-blown correction all the way down to 0.3. So again, we do not want to be dropping much lower. We definitely don't want to be dropping below 38,000. If we can remain above 38,000, that is going to be the most ideal scenario. Now remember, according to our monthly charts, we do not expect a break of 48,000 until at least after April or the start of April. That gives us quite some time over here, guys, to either correct a little bit more, then bounce and continue upwards and break through, or push sideways here and break through, or even go much, much lower and break through. Now, I would say from a probability standpoint, the significant likely scenario is that we find support between the 40, okay, to the 35K range. This is going to be the likely area of which we find support and continue upwards. I think a drop below into this lower range is very unlikely. I would say this is less likely than consolidation where we are now and a breakthrough. I would say that is less likely. The reason being, like I just said, we have a significant amount of support just below us over here that we would have to break through for us to facilitate a continuation down to that yearly uptrend, and this could take a considerable amount of time to break past. If we do continue toward the downside, we'd have to see some significant selling pressure, we'd have to see some significantly negative news to actually push the price down aggressively, and first and foremost, we have to break through 38K, and like we know already, support is support until it is not. So let's talk about the current range and the possibility for a bounce. So of course, as Bitcoin enters a major area of high time frame support, there is always a possibility of a bounce, but these bounces don't occur rapidly, and they definitely don't occur within a few minutes. We generally see a drawn out phase of decreasing bearish strength, bullish absorption, and then we have an overall rotation in momentum, and the price is able to reverse. So let's take a look at what is happening, guys. We have our short-term bearish trigger. This is going to be now a short-term bullish trigger, okay? So this is a resistance and it is a short-term bullish trigger, meaning if we're able to break back above into this range, that would be the start of a reversal developing for Bitcoin, and we would like to see again the same levels of resistance that we had before break above for the price to continue upwards. If we break above our 42K resistance, we will likely continue upwards to our 44. We break above our 44, we continue upwards to our 45. We break above 45, we continue to 48. So we do have a significant amount of resistance sitting above us, and the validations we've been going over for the last couple of weeks remain very much intact. These horizontal levels don't become invalid. They remain very much valid going forward. So even if we come down a bunch and we come back up, these levels will still be acting as key levels of resistance in a month from now, or a few weeks from now, or a couple days from now. They're still going to be very significant to pay attention to. The main level you're watching right now is going to be, of course, this lower level of resistance and bullish trigger. If we come up and we reject from it and break back down, we'd expect a continuation toward the downside. But if we do break through that, again, a reversal will be developing. On the short term, we have created a potential local low over here. We can see if we drag this across, we do have a potential local low forming at around about 39,400. Again, if we break through that low, we will likely see a continuation back down to fill that small gap on the VRPV to around 38,700. So we can see on the VRPV here on the side, we have a little gap between these two price points. This is going to be this base of resistance. This is going to be that base of support. If we do correct underneath this local low, we'd expect this gap to fill and the price action to drop down to $38,835. That would be the next short-term move for Bitcoin. So if we zoom out, guys, a quick and overall assessment or summary of the video is: do not panic on high time frame corrections. They are very healthy and normal on macro uptrends, okay? Number two, the bull market is still expected. The macro charts still look healthy. We are rejecting from an expected rejection zone. 48K was not a shock. This correction is not a surprise, okay? We were telling you guys for months. We were telling you for about a year, at least a year, that 48K was going to be a major point of resistance on the macro chart. And if we are going to see any sort of reversal occur, it is going to occur from 48K. So it wasn't like this area has been sporadically and randomly turned into a resistance and all of a sudden we're nuking. No, it is an expected resistance that have now been playing out. The question is, how low can it go and when will Bitcoin reverse? We have a few points we are looking at. We have a plan to execute. So now it's just following and trusting the likely scenarios to play out. In trading, you can't always be right. Sometimes things happen that has got a very small probability of playing out. But that is just a game, okay? You have to put your bets with what is more likely and more probable. And if these supports fail to hold, then that is just how it happens. We can't actually control a market. We can't prepare for things like that because it is not perceived, it is not likely. So stick with what it is likely, plan, manage your risk, so if things occur that are unlikely, you do not get wiped out from one small move. Okay, guys, thanks for watching. If you take anything away is relax, calm down, it's not the end of the world. You're going to hear people calling for ridiculously low targets, and that are never going to happen, just as people call for ridiculously high targets when we enter a bull market. It is never going to happen. Make sure you're very well aware that the 48K resistance was a identified and logical place for reversal, and all we are seeing now is profit taking and money being taken out of the market as we approach a macro resistance. The downtrend we are in the short term will at some point find support, and these support levels have been marked out. When we do bounce and continue upwards, the macro uptrend will resume above 48,000 and the bull run will likely start. Thanks for watching, and I'll catch you guys in the next one. Cheers.